If you are a person who needs to send remittances overseas for specific purposes such as education expenses, medical expenses or for travel purposes etc., then you should learn about the Liberalized Remittance Scheme. The LRS is a framework established by the Reserve Bank of India, which allows Indian residents to send money abroad for various permissible purposes. This scheme was launched in 2004 and aims to simplify and liberalize the process of remitting funds overseas, thereby making global financial transactions easier for Indian residents. It's important to note that the Liberalized Remittance Scheme is applicable only to resident Indians. This is not applicable for non-resident Indians because there are different norms for remittances from NRO and NRE accounts. Let's now learn about the key features of the LRS. There is a limit up to which remittances can be sent under the LRS. Currently, the limit is $250,000 in a single financial year. The purpose of remittances is also specified. Remittances can be sent for various purposes such as education expenses, medical treatment, travel expenses, investments in foreign companies, donations to charitable organizations, and purchase of assets abroad. Another important feature of LRS is that it allows individuals to transfer funds overseas without any prior approvals. This makes the process quicker and more accessible. However, remitters have to comply with certain documentation and reporting requirements, including providing proof of the purpose of the remittance. The scheme allows multiple transactions within the annual limit, which enables individuals to make payments as needed throughout the year. So, what are the advantages that LRS provides to remitters? This scheme provides a good level of flexibility and accessibility. It allows residents to transfer funds for various personal and investment purposes, enhancing financial flexibility. LRS also gives specific importance to education and healthcare expenses. By allowing remittances for such expenses abroad, the scheme facilitates easier access to global opportunities. It also opens up avenues for Indian residents to invest in foreign assets and diversifying their investment portfolios. The LRS simplifies the process of remitting funds by eliminating the need for approvals for each and every overseas remittance. And, finally, by enabling individuals to pay for travel expenses, the LRS supports the tourism sector and allows individuals to explore global cultures and experiences. Let's now explore the tax impact of making remittances under the LRS. Tax collection at source is applicable to certain remittances made by Indian residents under the LRS. The following are some important points on TCS applicable on remittances. Since October 2023, a standard tax collection rate of 20% is applicable on remittances under LRS, for amounts exceeding 7 lakh rupees in a financial year. But, the TCS rate for education and medical expenses is lower. It is only 5% if the remittance is for overseas education or medical treatment. And, if the fees is paid through a loan from a bank, then, the TCS rate will be only 0.5%. For overseas tours, the TCS charge is 5% for a remittance value below 7 lakh rupees and 20% for any value above 7 lakh rupees. So, it's important for the remitter to provide for the additional amount that will be collected as tax, so that the remittance amount is exactly the amount required. Let's now learn about the tax collection process. The TCS is done by the authorized dealer, usually banks or money transfer operators, at the time of the remittance itself. The amount of tax collected at source can be claimed as a credit against the total tax liability while filing the income tax return. Please keep in mind that the 7 lakh rupees threshold limit applies to the total remittances made in a financial year. If multiple transactions are made, the TCS will be collected on the aggregate amount exceeding 7 lakh rupees. If the remittance is sent in foreign currency, then the TCS is calculated on the equivalent amount in Indian rupees, based on the prevailing exchange rate. The TCS on LRS remittances can be used for claiming credit in your tax return. So, ensure that you get the Form 27D from the bank or authorized dealer, confirming the tax amount collected at source. Also check this with your Form 26AS, which will have all the details of the TDS and TCS collected from various sources. And, always check for any updates from the RBI or the Income Tax Department, as regulations can change. Now that we've learnt about the LRS scheme, its key features and the tax collection at source, let's learn about the documents required for LRS remittances. The first step is to submit the completed application form provided by the bank or authorized dealer. Then, you'd need to provide an identity proof document, which is usually a government-issued identity document such as your valid passport, Aadhaar card or driving license. Another document that would be required is your current residence address proof, such as the recent utility bill like electricity bill or a bank statement with your current address. Your PAN card copy is another document that is required. This is needed for relevant tax identification purposes. You'll also have to provide documents to support the purpose of remittance. If the remittance is for education purposes, then the college admission letter and student visa might be required. Similarly, medical certificates or treatment estimate from the overseas hospital might be submitted for medical expenses. If the remittance is for travel purposes, then the travel itineraries and flight tickets may be given as proof. The details of the bank account from which the funds will be remitted will also be required. If the remittance value is more than 7 lakh rupees, the tax collected at source acknowledgement has to be provided by the bank or the authorized dealer who does the remittance. There are some important points you would need to consider while making remittances through LRS. If you plan to make multiple remittances, then you may need to provide documentation for each transaction. Ensure that the total remittance does not exceed the annual limit of $250,000, or equivalent. Also, different banks or financial institutions may have slightly different documentation requirements, so it's advisable to check with your specific bank or service provider. To summarize, the Liberalized Remittance Scheme has provided an easy option for Indian residents to remit funds abroad, providing significant advantages in terms of flexibility, investment opportunities, and personal financial management. We hope that this video has given you a quick insight into the LRS scheme and has been useful to you. Please do subscribe to our channel. Thank you for watching this video.